Hey guys, Akil Stokes here. Welcome back to the channel. Unfortunately, I'm not going to have time to do a normal Trading Edge video this week, but I wanted to give you something very special instead, and it's going to be a two-part trading series. Now, you've probably heard me say the saying that good traders are great risk managers, and well, in today's video, I'm going to share with you a very powerful risk management technique that you can use, but I'm also going to give you a massive warning about it, which may make you not want to use it. We'll dig into that later. Then tomorrow, if I remember to schedule everything correctly, I'm going to share with you part 2, where we follow up on this conversation with a slightly different trading opportunity that builds on this conversation, but also shows the downside of it, I guess you can say. Just wait for tomorrow's video and you can check it out. All right, let's hop in. We're in the trade, right? We got our entry reason. We got and again, this is just an example. This is not a trade I was interested in. This is not a double top for me, but just to play it out as a double top. We in our trade, we know our entries, we know our stops, we know our targets, everything checks all the boxes, EST, we're good to go, right? So you're in it, you're all excited. Yay, I'm in a trade. I've been waiting for 5 years for this trade to happen. Whoop-de-doo. And then on the very next candle, the very next day, it's been violated. Ain't that how trading goes, guys? You wait, you get all excited. You're walking around like, man, I'm waiting for all day for this trade to close. The next day you come in, oh crap, it's violated. Son of a. So the pattern is violated, right? This is, as Amon mentioned earlier, no longer a double top. Well, it was a double top, it's a violated double top. So with the double top being the reason that you were in the trade, the reason that you have been in the trade is no longer value. The entry is still good. Yeah, you did exactly what you're supposed to do. Yeah. But now the reason for you trading is no longer valid. And this is where something called the graceful exit comes into play. Have you guys ever heard me talk about that? The graceful exit? It's kind of like me at a party, right? I don't like going to parties and rubbing shoulders and brushing elbows. Maybe it's because I do it wrong. Is it brushing shoulders and rubbing elbows? I've always gone up and just like found someone and just, walked up behind them and started rubbing their shoulders like a massage. And I get a weird look and then I feel awkward and I leave. But maybe I've been doing this wrong the whole time. Maybe that's what that lawsuit is about. Anyway, the graceful exit. It's me at parties where it's like I come in, I say hi, and then I just slide out the door, right? It's when you are in a trading opportunity, and then all of a sudden, the reason for you being in that trading opportunity is no longer valid. And you give yourself the option to say, hey, I am no longer in this trade. I have a lot of risk on the table. I'm going to give myself an out. I'm going to give myself an opportunity to leave early. Does that make sense? Just the general premise. You're in a trade. The reason for you being in that trade is no longer valid. You're saying, oh crap, this is probably going to be stopped out because that's what we're going to assume, right? When our level of structure or whatever has been invalidated. If I can save some money instead of losing, what do we have at risk here? Instead of losing 160 pips, if I can lose 27 pips, that's a win. Does that make sense, guys? Because you're assuming you're going to lose. You're assuming you're going to lose. So now it's like, can I cut my losses? And there's different ways to do the graceful exit. One way would be you exit at market right away, where you're like, okay, signal, invalid, get out, lost 27, better than losing 170. Or you can you can move to a certain point where you're like, hey, if price action comes back to break even, then I exit for break even. So if the market gives you a chance to get out for break even, then you exit for break even, right? You can customize it however you want. But the point is, you are trying to put yourself in a situation where you don't lose as much as you plan to lose, and by doing that, it's a win. It's a risk management tactic, active trade management tactic. So sounds good, right? Good traders are great risk managers. Kind of rule number 1 on trading is let your profits ride, right? Maximize your profits and minimize your loss. So you're saying, Akil, man, if I get a chance to minimize my loss and take just a small percentage of loss, then boom, that's good, right? My next win will make up for it even more. So it made sense to me when I first heard about this, and I remember implementing it in my trading, and it didn't last that long. And I tell you guys all the time, right? I am very experienced with winning. I am even more experienced with losing. I don't get happy over winners. Losses certainly don't bother me because I lose all the time, right? I am historically like a 55% trader. I'm going to lose just as many trades or almost as many trades as I'm going to win. I am accustomed to it. It doesn't bother me. I'm like, imagine me being like a UFC fighter and a random person punches me in the face. Like, I get punched in the face for a living. That's not going to bother me. I'm going to keep walking and just be like, hey, thanks. Right? So the thing that bothers me, however, is doing my analysis, putting myself in the right position to trade, but then not taking advantage of the trade. So like it could be if I do my analysis and the trade signal comes, but then I punk out because I'm scared, and then I go and see the trade win without me. Like that really bothers me. Or like if I miss an alarm, right? If I, have my phone on mute, or I put my phone somewhere and I get an alert for, price being at a level, and then I forget to go check it. And then it's like, oh crap, like a self-inflicted wound. Like those things kill me. Those things kill me. So what happened when I would test and actually trade the Graceful Exit is that I would find a lot of opportunities that would cause me to gracefully exit and then go on to win. And that got my blood boiling, right? I don't know if you guys have ever had that feeling. Have you ever had that feeling, guys? And Amon real quick says, you should have confidence in your trades and stick to your stop loss. Yes and no, right? Because they're yes and no, and there's no wrong or right answer to this. But again, think about this, Amon. You're trading this because it's a double top, right? So the entire trade is based on the validity of a double top, right? If the double top becomes invalid, if price action breaks the level of structure that is the whole premise of your trade, the market is telling you you're wrong. The whole reason that you got short has been broken. I don't think there's anything wrong with assuming you're going to lose, right? Whenever I see a trade and a level of structure gets violated, guess what I do? This is part of mental preparation as well, but I assume I'm going to lose just because of the rules, right? What's our rules? If price action breaks and closes above structure, then we predict price action to do what? Go lower or go higher? We predict it to go higher. Shoot, that's the opposite of what I need to happen. So I don't want you guys saying, I look, I'm 100% about trusting yourself. But this is actually a technical reason, and this is it's not a bad play to aggressive exit. This is a technical reason of you saying, hey, I'm wrong, let me get out before I'm more wrong. Right? It's not a bad thing. Right? It's not a bad thing, right? It's the difference. I don't want to say it's the difference between being stubborn, right? Because it's rules based. So, but like, it's not a bad thing to think this way. There's nothing wrong with the graceful exit. What I'm trying to say is, you have to know yourself as a person. So for me, going back to my story, when I would trade it, I would have situations that would invalidate my reason for entry. I would exit the trade gracefully as I could be. If you ever see me on the dance floor, you know that's not that gracefully. It's kind of like a newborn baby giraffe, if you've ever seen that. Ooh, it's tough. But I would then, go on to watch the trade win without me. And again, what I found out in this journey of self-discovery about myself is that's what gets me angry. It's not losing. It's the fact that I would feel like I did everything right and I didn't follow through with it. And that would lead to other emotions where I'd mess up on my next trade because I'm trying to get revenge and all this fun stuff. So I discovered that even though the graceful exit may be profitable, right? You may save, like, let's say it may work. It may help you 8 times out of 10 and only harm you twice. What I found is that, and these are just made up numbers, right? So don't, you'll know it in whatever your system is. But let's just say it saved me money 8 times and I got bit in the butt twice. The emotional impact that it had on me for those 2 times that it bit me wasn't worth it. So for me, it just wasn't something that me and my trading personality could deal with. And again, that's a big difference from saying it's a bad strategy, because you can't judge it off of one opportunity. You can look at this opportunity, and we'll follow through in a little bit, and you'll be like, oh man, the graceful exit sucks because blah, 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 blah. But then you can look at 14 other opportunities and be like, actually, it would have saved me this much money. And your math will do it. Let's take a look at how this, and when you back test, you have all the answers. Like ultimately you back test and you'll have the numbers that will tell you if it hurts you or helps you, right? You're not kind of guessing and making it up. You have numbers, right? Everything is quantifiable in what we do here. So let's go forward with it and see what happens, right? So let's say we exit it right here. Yay, we got out. Where's my happy face? We don't use it that often. There you go. Look, we got out. I only saved myself, I took negative 30 pips, right? And then price does this. And then this, and then this. Okay, now you're feeling better. You're like, aha, I knew it. I knew I did the right thing by getting out. And then it dives down, and let's say it ultimately goes to your targets. That's where the ouchie comes in. That's when that smiley face goes to a cursey face. So understand that there are going to be opportunities like that where the graceful exit may help you the majority of the time, but every once in a while, maybe it doesn't. And as a trader, you have to make the emotional decision where it's like, hey, the numbers make sense. I'm going to stick with this and I'll eat some pain. Or I can't eat this pain and I'm just not going to use it. It's no different than any other trading strategy with targets, right? Think about a trend continuation trader. Someone that decides to shoot for the 127 versus the 1618, right? You're happy every time price reverses right at the 127, but then when it shoots further and goes to the 1618, you can't all of a sudden be pissed at yourself because you didn't shoot for there, right? It's the gift and the curse, right? You're gonna have a higher win percentage at the 127, you're gonna make more profit at the 1618. You can't have the best of both worlds. You got to choose. But yeah, perfect example for a lesson on the graceful exit here, because this is when I remember watching and being like, hey, look at that, breaking close above, we're gonna go higher. Oh, faked out as we come back lower here. Aman said, would you write this as part of your rules to allow you to you have to, yeah. Rule of thumb, anything you use in your trading has to be written in your rules. So you can't just wake up and be like, I'm gonna gracefully exit today. I'm not tomorrow. It's gotta be in your rules. Everything is rule based. You cannot do anything on the chart that is not in your rules. Unless you're just playing around on a demo somewhere and experimenting with stuff. But if you're actually trading, it has to be in your rules, yeah. And guess what? You have to gracefully exit or not gracefully exit every time. You can't pick and choose. Because if you pick and choose, is that based off facts and figures or is that based off emotions? That's based off emotions. And again, that's what I would do. I would look at this one and I would be like, oh man, that graceful exit stinks. I lost money. And the next graceful exit would come and be like, I ain't taking it because last time it cost me this much money. And then I get blown up by 100 pips and be like, darn it. If I would have took the graceful exit, I only would have lost 20. And then next time I'm like, well, last time I decided not to take it and I got bit in the butt. This time I'm doing it again. And then that one does this again. And then right. And then you're yo-yoed. You're always one step behind. Like trading during news, right? You're always, as soon as you buy, the market goes south and you're like, oh crap. All right, I'll just go short with it and make up. Oh, darn it, it went back up again, right? It's one of those things. So yeah, this is where understanding yourself is important. What makes you tick? If these situations didn't make me tick, I would graceful exit all day. Save money. I do active trade management. I roll stops. I don't like losing more money than I should. I would graceful exit all day, but I can't deal with it. I can't deal with it. I know myself. I can't deal with it. But I am just a single man. You need to figure out what makes you tick. And that comes with experience. Hope you enjoyed the video. Come back tomorrow for part 2. Like, subscribe, do all that fun stuff to support the channel before you go. And don't forget about that year-end trading workshop we have coming up in November. Again, seats are filling up fast, so make sure you don't miss out and register today. Link in the description box below, or head over to www.tier1trading.com. See you guys tomorrow.